Today we're at Macquarie Bank, and the reason we're here is with Steve Marinucci is to better understand what it is that the bank is looking for when they lend money against a rent roll.
Cool. Thanks, Dean. Look, putting it very simplistically, the bank assesses what we call the 3 C's, being character, cash flow, and collateral. So, and they're in order of importance. The first one being character. So the bank needs to get a good understanding in terms of who we're lending the money to. So the person behind it, what their experience is in real estate, what their experience is in management, because a lot of the times when they're buying a business for the very first time, buying a business is very, very different to being a successful salesperson. So what are their skills that they're bringing? Understanding who are the key people in the transaction. So a lot of times when you buy a rent roll, you'll be taking on the existing property managers as well. So it's good for the bank to understand who are the people that are ultimately going to be controlling that asset, being the rent roll. So in terms of their experience, so they might have purchased a business that's been there for 10 years and they have had very minimal disruption in terms of staff. We also want to understand, and it's a good thing in terms of due diligence for somebody buying the business, to ensure that culturally it's a good fit when they are buying a business, because we've seen time and time again people going into businesses where there isn't that cultural fit, and you find that property managers end up leaving. So character is a very, very big part of what we look at. The second one is what we call cash flow. So in terms of cash flow, what is the ability to repay the debt, regardless of what the amount is? So in terms of cash flow, the best examples that we see when buying a rent roll is somebody who's already got a rent roll at the moment, buying another rent roll and bolting it into the business. Because in those situations, you generally find that there's some additional staff expenses for the additional property managers that they're bringing on. Then you've also got your interest on the loans. But apart from that, rent stays the same. If they're not taking on another premises, you'll have a little bit of operational expenditure such as printing and stationery that obviously will increase by managing more properties. But generally, the majority of the expenses shouldn't differ too much. So, and that means that the ability to service the loan should be relatively good. So that's cash flow is definitely is right up there in terms of importance. The third thing that we look at is the collateral. So what secures the loan behind it? So generally Macquarie's always been of the view that we lend 60% of the value of the rent roll. And look, for some existing businesses that have been trading for a number of years, we can look at going beyond that. But it all comes back to the character and the cash flow. So sometimes we have gone even up to 70% the total value of the rent roll, and looking to repay that back to a 60% LVR. And the instances where we do that is where the character is very good. So the person we're lending the money to, we understand them, we know that they're a good operator, and the cash flow behind it is very good. So we know that there's the ability that buying this additional rent roll that plugs into this business, there's going to be a lot more cash flow readily available. So if things were to happen, there's more ability for that business to repay debt. So that's why we look at that in terms of order of importance. But definitely, character is the first thing that any sort of credit manager will assess, and something that is part of our jobs, understanding who this person is we're lending to. And character can range for a very range of different things. So not only is it experience in management, but if somebody's running a business at the moment and are looking at debtors and things such as the ATO and not paying them on time, running their accounts into overdraft continually, overdrawing their accounts, they're things that we look at as well, because that person who's currently in business, even though their cash flow might be better once they do buy a rent roll, what we find is if they're not controlling their expenses now, those people there are ones that will end up buying a business, buying better cash flow, and think that they have got more money to be able to spend on other things than personal lifestyle. So that's why even before a business goes and buys another rent roll, it's really important to see those sort of things in terms of their account conduct, making sure the superannuation's paid. They're things that we really drill down to in any sort of loan application.
So can get an understanding of someone's character, or are you happy with that without actually them doing any transactions with you? Like as in, like if you've never known them before, they don't bank with you currently, it's not an additional one.
Well, look, a good example of character is somebody that comes to the bank well prepared. We've seen good examples where people are provided.
What's well prepared mean?
Well, in terms of well prepared, like they've thought about the acquisition they're looking at doing.
Yep.
They come to the bank with a detailed cash flow projection, not something whereby they've just thought overnight. Look, buying another couple hundred managements would make sense to me. We've seen times where people come with a CV in terms of showing their experience on a page, saying that these are the existing businesses that they've run, and why they think they would be successful in running this real estate office. Or they come with a very detailed business plan saying that, look, this is how I forecast sales, property management to look like once I've done this acquisition. So that is somebody who's very, very well prepared. And if they're well prepared, it's a good sign of character.
Okay. Thank you very much, Steve, for that. That's really insightful. I said because especially the 3 C's being character, cash flow, collateral, that it really puts some depth to what it is that you look for. So thank you very much, Steve.
Thank you, Dean. Thanks for your time.